the euro is notably weaker than other major currencies except the Japanese yen and Swiss franc, even though the markets are generally blessed with risk appetite. Indeed, Euro-US dollar failed to take out the 1.33 level yesterday and is now back trading at around 1.31. A key factor of the euro's weakness is the worries on growth, in particular after a string of business sentiments data showed risk on a continuing recession in Q4, which would extend to Q1 2013. Also, the supposed strongest economies in Germany and France aren't immune. And there are talks that the European Central Bank could be forced to take additional easing measures in 2013 to boost growth. And indeed, judging from the price actions, the euro could be viewed as a funding currency for carry trade for higher yield currencies. While the US fiscal cliff issue is now past, focus will probably turn to the debt ceiling in the coming weeks. Republicans have already made it clear that they will press for dramatic spending cuts in exchange for raising the $16.4 trillion federal debt ceiling. Such a ceiling has already been hit, and it's estimated that the extraordinary measures for funding federal operations could only buy around 2 months' time for negotiations. House Speaker Boehner is insisting that any increase in the debt ceiling should be offset by equivalent spending cuts. Meanwhile, President Obama proposed that the president could unilaterally raise the limit unless being overridden by 2/3 majority in Congress. Treasury Secretary Ievner even goes further and suggested eliminating the debt ceiling altogether. On the data front, China non-manufacturing PMI improved to 56.1 in December. The Swiss KOF leading indicator is expected to drop to 1.4 in December, and the SVME PMI is expected to drop to 48.3 in December. German unemployment is expected to be unchanged at 6.9% in December. UK PMI construction is expected to rise slightly to 49.5 in December, and any upside surprise here could trigger another sell-off in Euro-British pound. From the